All right, in today's video, we are going to provide transparency on the subject of commissions on whole life insurance policies. Always a sensitive subject. So let's have some fun with this one. This video, the idea actually came from a meeting yesterday. People always ask about commissions, but was meeting with an individual who was just approved for whole life insurance. He's looking at a decent amount of money to pay into a policy on an annual basis. And he asked, he's a very, very analytical guy, wanted to see every page on every illustration, read through it, had a ton of questions, but he asked, he's like, what do you get paid in commission? And then he asked a follow-up question, is there a way that we can negotiate a smaller commission for you in order to give me, the policyholder, more cash value? And those are completely fair questions in my mind. I mean, it's his money going into the policy. So to answer those questions, what do you make in commission? I'm going to provide full transparency on that. I'm going to start with an illustration and provide an answer to his question, or I'm going to answer it for you in the same way I answered it for him. But then the second question he asked was what? Is there a way that I can negotiate or that we can negotiate a lower commission in order to give me, the policyholder, more cash value? And my response was to him, unfortunately not. If we could, we would. We set all policies up for maximum consumer value, which almost every single time results in minimum commission, especially up front. But how it works, really when you look at a cash value life insurance policy, is if it's designed for maximum cash value, we can take that life insurance policy to the insurance company and we can say to them, hey, this client would like to work without an agent because we don't want any commissions paid out. What would happen is that the policy would actually perform in an identical fashion, meaning working with an agent or not working with an agent, it doesn't impact the policy performance at all. The ultimate design of the policy is really what impacts that cash value, designing the policy for maximum cash value. That's what impacts it, the design. But the answer to his question was no, we cannot negotiate a lower commission. And there's a good illustration on this point too. I actually learned this years ago from one of my managers when people would ask about commissions on life insurance policies, and he would relate it to purchasing an airline ticket. So for example, I can buy an airline ticket because I want to go to Hawaii with my wife. I can buy that airline ticket directly online from the airline, or I can purchase it from my travel agent. The ticket might cost the exact same dollar amount to me. However, if I purchase it through the travel agent, the airline is going to take a haircut because they have to pay a commission to the travel agent for the travel agent bringing them my business that they otherwise would not have had. Same ticket, but a commission is paid to the travel agent, even though the cost was identical in that respect. So with whole life insurance, same thing. If that illustration is accurate, if you were to ask me how airline prices work with travel agents and such, I'm not an expert there, so I couldn't tell you. But I hope that illustration made sense. So before I get into all of this, I want to walk through exactly what I walked him through, just to show you, here's how we answer questions when it comes to how commissions work. So here's a life insurance policy. We did it through the actual illustration because these are the numbers of the illustration that he's looking at. So now it's consistent with what the consumer sees. When you pay money into a policy, where can it go? Toward the insurance premium, which is right here, or we can pay it toward the paid up additions rider, PUA rider, which is right here. Paid up additions rider. How commissions work. The company and product will have a direct impact on it. This is more of a traditional whole life insurance policy with one of the major mutual companies. How they work specific to this company. We will look at different companies later in this video, different company sizes. We won't mention any names with this topic because we can't. The first year, this company pays a base commission rate of 50%. 50% right here, 50. Now, what I mean when I say base rate is if you were to work with any agent out there, the minimum that they will be paid is 50%. However, for full transparency, they actually pay us a total rate of 85%. And you do have to earn your way to that. They do that after you produce a decent amount of volume with them, which is really called just bonus commissions. It helps us cover our overhead as a company, as I have staff and such. But just to answer your question clearly, in the first year, they pay a total of 85%. So if you have a $10,000 base premium, what's that come out to? $8,500. Okay. Now, on base premium dollars, there are renewal commissions. So we've got years 2 through 10. Now, all companies do it different. Usually it averages out to a 5% renewal, meaning years 2 through 10. If I have a $10,000 base premium, it'll be $500 per year. Most companies have that 5% renewal. This company did it a little bit different, where years 2 through 4, it was a 10% renewal. Then years 5 through 10, it was a 3% renewal. So it's close to the average. I'm just gonna, for the sake of simplicity in this video, say years 2 through 10, it's like most companies at 5%, which will come out to $500 per year. Okay. So in the first year, based on the premium only, $8,500, and then years 2 through 10, $500 per year is paid in renewal commissions. Okay, that's great. PUA, $90,000. This company's PUA commission rate in all years, 3%, which comes out to what? $2,700 in the first year and $2,700 each year thereafter after that, as long as he keeps making payments. His plan was only to pay into it for 7 to 8 years. So if he stops after 7 years, guess what else stops? The commissions to the agent. So in this case, if I want to take the total first year commission, what does it come out to if you add these numbers together? About 11.2. It's actually slightly higher than that. The reason why, I'll circle this in gold, this OYT stands for 1 year term insurance rider. The PUA payment covers that, but in the first year, and not all companies do this, this one does, they actually credit that as base premium in the first year, which bumps the rate up a little bit. It's minor, but it does bump it up. So it's probably closer to 11.4 or so in the first year. Over 11 grand in this example. But that's just clarity with respect to how the commission works with a larger mutual insurance company. I'll add this. Some people won't like this. This is about, or this is among the lowest you'll see with the top companies. If you look at some of the major mutual companies, or if a company solicits business in the state of New York, the max commission rate with that company on base premium dollars will generally range between 85 to just about 95%. At the end of this video, we're gonna button it up with a spreadsheet we put together which shows exactly what commissions look like. If you're subscribed to our agent training business, you have access to that. So that's exactly how the compensation worked in the first year, 11.2, and then each year thereafter, add those two together, $3,200 per year. So not bad, but keep in mind this is a maximum cash value policy for the consumer. So he wanted transparency there, which I have nothing against showing exactly how commissions work. Where often people I've found, and people I've worked for in the past, get very, very defensive when it comes to the subject of commissions is usually when there's something to hide. Just being transparent about that. Because if I design a policy that I tell you is maximized for cash value, meaning the premium is minimized, and then I go through the commissions, but then you find out that that premium can be minimized even further, say with the exact same company, all of a sudden, I look like a liar to you, like I stated something that was not true, and that causes friction. So where people often, this is from experience what I've seen, where people do not want to disclose what they make in commissions is the fear that A, people are gonna think, hey, that's just way too much, that's not fair, or B, if I disclose it, and then they find out that they could have more money, especially with my commission being lower, because we lower the base premium, that causes problems right there. And a lot of issues in the industry. When I say issues, between agents and why they fight with each other. So, looking at this example, because there's a lot more to it than what I just touched on here. So let's go through this in detail. If you're paying in $100,000, and if it's $10,000 per year, just take a zero off. It's all relative here. Base premium. If I go as low as I can, with the major mutual companies, smaller companies will allow you to go lower. Here's something like we just saw. $10,000 directed toward the base, $90,000 toward PUAs, or 10-90 split, which juices the cash value. So in this particular case, how would the commissions work? Well, I want to distinguish something here with larger companies, your major mutual carriers, some other smaller companies that solicit business in New York State, like Security Mutual, Penn Mutual does again as well. If they're a larger carrier or solicit business in the state of New York, that commission rate on base premium is typically going to range between 85% and some at 95%. The highest, typically 96.25%. But why larger companies, or specifically companies that solicit business in the state of New York? New York regulates commissions, and if I'm an insurance company and I sell in the state of New York, I have to abide by New York rules nationwide. So that's why. And that's why some companies choose not to solicit business in New York. It's probably not commissions. New York has a lot of other rules that you have to abide by. All right, let's continue on here. So let's take or peg the middle and say it's 90% with a bigger carrier. If I have a $10,000 base premium, what will I make in the first year? If this is your policy, what will the agent, make if the rate is 90%? So this is an agent who's done a ton of business. If they haven't done a ton, this could be much, much lower, just to be transparent there. Typically, you start out around 50 to 55 and work your way up. But here, what would it be if it's at 90%? $9,000. That's in the first year. How about years 2 through 10? The renewals will typically be at 5%, which will come out to what? Of a $10,000 base premium, $500. Company selection is important. On that illustration we just went through, it wasn't this high. The base was about $8,500. This is about $1,000 more. That's where company and product selection comes into play. Just want to be very, very clear here. PUAs with the bigger companies will typically range between 2 and 3%, which can be a big deal if you're doing a high volume of PUAs. But let's assume, for this example, let's use 3%, which will come out to what? $90,000, 3%. $2,700. So what's your total then? That's all years, by the way. So that's years 1 through 10. After the 10th year, some companies will pay the same PUA rate. Some companies drop it. Does depend on that. So just want to be very, very transparent there. Now, back to this example. What did I make in the first year? $9,000 plus $2,700 comes out to what? $11,700. That's with a major mutual company or a company that solicits business in the state of New York. Progressing onto smaller companies. Now, transparency needs to be provided here, because usually we just get an emotional smoke screen. This often ranges between 130, I've seen it as high as 140%, but usually this is the range on base premium dollars. So, sticking to 130 for this example. So we use 130% commission rate with a smaller company, which is very, very common to see. Often they throw it at you. If I have a $10,000 base premium, what does that come out to? $13,000. On PUAs, it's usually around the same 3%. I do sometimes see, or often see, 3.5%. They go a little bit higher there, but not all the time. Let's use 3% just for simplicity here, even though it'll often be 3.5. I mean, if you really want to nickel and dime another 0.5%, you can. PUA rider, by the way, is what everyone's attracted to. That's what juices the cash value. When you look at corporations, that's where they're stuffing money in whole life insurance products. So $2,700. I forgot the renewals. Same thing with the PUA payments. Usually it's around 5%. Sometimes I'll see on their grid they'll pay 8% or a little bit higher renewals. For the sake of simplicity here, it will be higher than 500. You know what, let's just go with 500, because really the purpose that I want to illustrate here, circle this in green, is this is where you see the big, big difference. And this assumes both a $10,000 base premium in both examples. So putting commissions to the side, if you were just interested in a maximum cash value life insurance policy, regardless of what the purpose was, and you knew based on actual data that the larger mutual companies have a track record of providing it, of producing. Smaller companies might, we just haven't seen it yet. We're still working on that. But just knowing which one's going to maximize my value as the consumer, we've seen larger companies do it. And I would say that whether I'm in the business or not. So what I want to emphasize here is when I'm being sold a policy, looking at different options here, like larger companies paying smaller commissions, lower base premium. We have it over here actually. The higher the cash value, particularly upfront, means the lower the commission. Larger companies tend to pay lower commissions. So when you are being sold a life insurance policy, never be afraid to ask questions about that. This is your money going into it. A lot of buyer's remorse comes into play when people don't ask those questions, then find out after the fact. Like, oh, I've been there before. Let's wrap this up with an example here. Here we go. Two examples actually. First, we'll do this. So what we did, got a nice little workbook here. Large mutual A, large mutual B, small mutual A, small mutual B. Different commission rates, which are from actual companies. I'm not going to name the companies for a couple of reasons, but we see based on a $10,000 base premium, here are the net commission rates in the first year only. Same thing over here. With the PUA payments, we've got the 3.5% rate in this particular case. But night and day in that respect. So last thing I want to touch on here has to do with policy splits, as this is very important, is when it comes to the actual design of the policy and maximizing that. What's the most important thing here? How do I maximize the cash value life insurance policy? Well, look at actual performance, can also look at the guarantees. What we've noticed to be consistent, the lower the base premium, the greater the cash value. So our compensation works here specifically. If I'm going to take, this company has a little over a 90% rate, so let's use a 90% commission rate on base premium. This guy, same thing, times 0.9. There we go. Same company, same product, everything's exactly the same. Huge commission difference. Now this will be balanced out a little bit because we've got a higher PUA. PUA rate's 2%, but still, huge, huge difference. Now taking commissions aside, which we always try to do, when we just simply look at the numbers, which one gives the consumer, if this is your policy, greater value? Break even year 5. Here, break even year 7. Scroll down, funded for a long period of time. Ever hear of this one? Can't fund a policy for a long time with a 1090 split. We've got a million illustrations. We peel this data right off, right out of the illustrations. Here you go. Which one gives you more money? Like, it's pretty simple. So I hope that this provided transparency around how commissions work with whole life insurance products, going deep, like we always like to deep dive. If you have any questions, please reach out anytime. If you enjoyed, hit the like button, subscribe for more, and as always, I hope this helps. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.